Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of May 13th through May 17th, where we'll try to see, has the sell in May crowd gone away, or have they just gone fishing, and will we possibly see another wave of selling towards the end of May? So again, thank you for joining us for part one of our weekly trading game plan for May 13th through May 17th. And again, we'll see if the sell in May crowd has gone away. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for May 13th through May 17th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, our trade ideas, etc. We keep all of our notes documents in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as our notes from previous weeks, and you can also find a direct link to that Google Drive folder in the description box below. Welcome to Ricky Khan. Thank you for joining us in the chat today. Hope you're doing well. So first, we'll take a look at how the markets ended up on Friday in the main page in FinViz. So we see pretty flat, had an initial bump up in all the markets and kind of fizzled out towards the end of the day. And again, all ended up pretty much flat. Dow up 0.3%, NASDAQ down 0.03%, S&P up about 0.16%. We had more decliners than advancers, so 53% decliners, 43% advancers. Got 85% new highs, only 15% new lows. Got 57%, almost 58% above their 50-day moving average, 42% below, and 66% above their 200-day moving average, 33% below. So again, it's showing bullish. I can probably run the market on close, but generally throughout the day was pretty flat. See in the heat map, a mixture of some of the Mag 7s, so Microsoft, Nvidia, Broadcom, etc. Financials did pretty well. Apple, Amazon, Tesla down. Google down. Meta flat. So the only sectors, as we'll see, real estate, energy, and some commercial cyclicals were red. So pretty mixed. Welcome, Logan Flips, Sydney Osborne. Thank you for joining us today. Hope you all are doing well. See some of the news. Home prices getting out of reach. Wall Street sending a bullish signal for S&P earnings. Closes up. Another weekly gain ahead of inflation data. We'll talk about the economic data coming out this week. S&P's return over the next decade could average just 1% a year. So that's somebody's prediction. Dow jumps 100 points, post 8th winning day and best week of 2024. So the Dow had its best week of 2024. And the indices book gains, extend may rise. Look at some of the futures. So we saw oil break down below 80. It did surge up a little bit. We saw gold made a run towards 2,400 and broke back down, still sitting above 2,350. I think both of those were based on renewed tensions in the Middle East. And again, as those subsided a little bit, again, we saw a little bit of a retracement back down in both oil and gold. Natural gas popped up and then it also retraced somewhat. See the futures up slightly on the S&P, up slightly on the NASDAQ, down on the Russell, up a little bit on the Dow. Treasury yields popped back up a little bit on Friday, so now the 30s above 4.5, 10-year about 4.5, and 5-year about 4.52, so we have a mild inversion. We'll look at the foreign currencies in the futures. Welcome, Walter Lyons. Thank you for joining us. Hope you're doing well. So let's look at the major indices. Again, you can access these screeners also in the screener sheet, in our ETFs Google sheet, and our Watchlist Google sheet. Also in our notes documents, so each of the major indices. So we see the Dow pop back up. Looks like it's testing its all-time high, its recent high. IWM, not so much, but it's holding above that support, above the near-term support level. So it's got pretty good support from that moving average. It's got some more upside. See if it can hold that moving average. See the Qs are testing that multiple top. So we'll see if it tests its all-time high, can break through that multiple top. You see an ascending wedge occurring on the Qs. Also, the S&P looks like it's close to testing its recent all-time high as well. Got, again, support above the near-term moving average. So, again, good support there. And, again, in our theme about did the sell in May crowd go away, we can see in all the major indices kind of a melt up. And also, if you look at the volume, this is why, again, part of my thesis is that the sell in May crowd may have gone away recently. We saw a decrease in volume in all the major indices. Some of the trading this week was pretty light volume, but without the sell in May crowd, with a lack of sellers, we got some buyers, and we can get this steady melt up. So if the sell in May crowd has in fact gone away, or at least gone fishing for a little while, we could continue to see this slow melt up. We might make a test of the previous high, might make a new all-time high, but then we'll have to see if at the end of the month, if the sell in May crowd comes back and takes profits on those all-time highs. We look at the technology components. Again, we see ARK-K continues to be weak, again, sensitive to high interest rates. See the FANGs continue to be strong. The Magnificent Seven continue to be strong. Again, it's got support from the near-term moving average, got a multiple top. We could see, again, a push up to test that multiple top in the FANGs. Again, biotechs, a little weaker, does have support from the near-term moving average, but again, interest rate sensitive. They're going to be a little bit weaker. So they could break down. Semiconductors broke out of that wedge, went to test that near-term moving average, found some resistance. So we might see a bounce down from that resistance point in the semiconductors. Again, TQQQ has got some room up to that multiple top. Got some support from the near-term moving average. So some room to run up and test that multiple top in the Qs. Broad technology tested that near-term moving average, found some resistance, so not quite as much strength in the broader technology index, and we could see again a rejection back down to that lower support level. Welcome, Born to Be Free. Thank you for joining us. Hope you're doing well. Gerald Pitts, welcome. Thank you for joining us. Okay, let's look at the groups and the sectors. The Groups tab in FinViz. So Friday, again, kind of an interesting mixture. We've got defensives, and then we've got technology and financials and materials at the top. So again, kind of a flat day, light volume, and again, an interesting mixture of defensives and growth technology. The weakest were energy and cyclicals, some weakness in real estate. For the week, we see a kind of a defensive bent, utilities, financials, industrials, basic materials. Weakest were technology and consumer cyclical. So again, more of a defensive bent for the week. For the month, again, utilities and defensive. So again, we've got a pretty defensive bent for the month so far. The weakest were technology and energy. So again, even though we're seeing that kind of melt up in the indices, the sectors and industries are showing us kind of a defensive lean. So again, protect your profits, be careful. Even though we're getting a melt up in the indices, the market's telling you it's leaning towards defensiveness. So in terms of industries, we see some computers, some building, copper. And we saw that run in gold and silver. A little bit of a retracement later on Friday. Some of the REITs, again, interest rates popped up a little bit on Friday. Some weakness in gold, in oil, coal, so energy. Again, silver retraced. Looked like it was going to run up and test that previous high around 29, between 29 and 30, and retraced. Solar retraced on the interest rates. We saw a little bit of a pullback in uranium. For the week, however, silver and gold were strong, metals strong, utilities, copper, some of the REITs. Yeah, we did see a retracement a little bit in interest rates earlier in the week, so some of the REITs started to move up. Again, solar weak, coking coal, paper. Again, utilities strong for the month, some REITs. Trucking, solar, steel. Again, we saw a little bit of a bounce back up in steel towards the end of the week. Some oil. Okay, let me open up the economic calendar. We'll look at some of the highlights of the economic data from last week, and then we'll look at the economic data for the upcoming week. Let me grab a quick drink, and we'll go through all the economic data. Welcome to Crow. Thank you for joining us. Hope you're doing well. Just a quick reminder, as this economic data comes out, I try to capture it and post it in the Surf the Markets channel of our Discord as quickly as possible. So you can see I take a snapshot from investing.com, post the raw data, also any important news that comes out, or capture it from FinBiz, the natural gas and oil inventories, etc. Our Discord is free to join. You can find a free invite in the description box below. Great place, again, to get the real-time economic data. So last week, not a whole lot of highlights until Thursday. Thursday, we got jobless claims data. The initial claims was higher than expected. So a slight weakening in the job market. Continuing claims, however, was less than expected but higher than previous. So people are still able to find new jobs. We just got more initial claims. And the average, 4-week average, did go up a little bit. So again, the market viewed that as slight weakening in the jobs market, and therefore a higher probability that the Fed would cut sooner. So again, a catalyst, an upward catalyst, even though, again, nobody wants to see people unemployed. The market interprets that the Fed will cut sooner rather than later, and therefore the market took that as a positive signal. On Friday, we got the Michigan sentiment, and that was interesting as well. And you can see the one-year inflation expectations went up to 3.5%. So they're still going in the wrong direction from the Fed's standpoint, anchored above 3%. Their 5-year expectations, again, 3.1, higher than expected, and, anchored in the 3%. So that, should have been a negative in terms of the Fed's fight on inflation. Also, we see sentiment deteriorated significantly, so the consumer's not feeling as good. So again, those should have been perceived as a negative. However, the markets didn't really go down. So again, possibly some more evidence that the sell in May crowd has gone away, and we have a lack of sellers. that just are not reacting to this data. Again, this would indicate that the Fed's battle of inflation isn't going as they would like, and that they may have to hold interest rates higher for longer to get inflation to come down. So now I'll go over the rest of the economic data from last week, and we'll look at the upcoming economic data for next week. Okay. So we got some bond auctions. Didn't go too bad. Short-term bond auctions. Again, we've got Fed officials talking. They're going to, cause some volatility in terms of their view on, when should they cut, how fast should they cut. Again, just causing volatility in general. Get more hawkish Fed officials, saying they don't need to cut or they won't cut this year, etc. And more dovish, maybe they need to cut, etc. Mortgage rates went down a little bit. So again, and applications went up a little bit. So positive for the housing market. Oil inventories dropped, but less than expected. Again, we saw oil pop up, I think more so on the tensions in the Middle East, and then retrace back down below 80. Talked about jobless claims. Natural gas storage went up, but less than expected. Again, we'll see the trend in natural gas prices is up. Talked about Michigan sentiment data. Oil rig counts went down again. Total rig counts went down again. So again, reducing the supply, holding oil prices up. Look at the economic data for next week. So I made some highlights in our notes documents. So Tuesday is the important data. We've got PPI data on Tuesday, CPI data and retail sales on Wednesday, jobless claims on Thursday, and then a reminder that Friday is the May options expiration date. So except for Monday, we've got some potentially volatility creating economic data and events. However, again, if the sell in May crowd has gone away, we may see again light volume, not as much of a reaction to this data as we would normally see. Again, just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content should be considered for education and entertainment purposes only. So again, not much Monday except some Fed officials talking. Mester tends to be hawkish, so people I think know that at this point, but may cause some volatility. Tuesday, again, we've got PPI data. Again, important producer inflation. If that comes out higher than expected, again, it means inflation is stuck, it's smoldering, and that should be a negative for rate cuts. Wednesday, then we get CPI data. So again, if that comes higher than expected, that would hold the Fed higher for longer. But again, if we see a lack of sellers, a lack of participation in the market, we might not get as much of a reaction. Retail sales as well. Last time retail sales was stronger than expected. However, we did see that deterioration in consumer sentiment. So maybe they're not spending quite as liberally as they have been. Again, more Fed officials. Thursday, we've got some building data, jobless claims, housing starts. Again, we saw mortgage rates drop a little bit, but housing starts, I think, are expected to drop a little bit. More Fed officials. Mester again. and Friday, Baker Hughes, etc. So again, the important data points are PPI on Tuesday, CPI and retail sales on Wednesday, jobless claims on Thursday, and again, Friday is options expiration. We still got earnings. Still in the middle of the earnings season, although again, almost all of the Mag 7, with the exception of NVIDIA, have already reported. But again, I would highly recommend you go through the earnings calendar and see if there's anything that would affect any stocks that you are watching or in the same sector. Again, we're seeing, some pretty severe reactions to earnings, not only if they miss, but also if they give less, they don't meet expectations. So the expectations, particularly for the Mag 7 and the tech stocks, growth stocks, are very high. And if they don't meet those expectations, then they get punished for not meeting those expectations. And again, the expectations are very high. So the tendency would be, that they're going to go down from those expectations rather than up. You can hear how we trade around earnings via the link to that video. And again, I would highly recommend you go through the earnings calendar to find anything that may impact your trade ideas, your current portfolio, etc. Okay, let me grab another quick drink and we'll look at the market screen in Webull. Welcome, Alan Krantz. Thank you for joining us. Hope you're doing well. Just a quick reminder, if you're not already using Webull, you can still get 75 free fractional shares of stock by opening and funding an account with 25K or more. You get 20 free fractional shares of stock with less than 25K. We use Webull for our market analysis, our due diligence, the majority of our trading. They've also had several special offers to match or give a percent match on contributions to IRAs recently. I don't know if that's still ongoing. And also, as you'll see, Webull recently added futures trading, and they also added some naked options as well. So if you're not already using Webull, please join with our affiliate link in the description box below. You can get your free fractional shares of stock and also help support our BeachBum trading community, which we greatly appreciate. So I'm using the market screen in the online browser version of Webull. So we can see the number and then the percentage of advancers and decliners in this histogram. So we can see, even though the markets were flat to slightly up and we had the Dow, very positive, we had more decliners, 3,500 decliners versus 2,300 advancers. And we can see, the histogram of decliners is more heavily weighted towards the decline versus the advancers. So again, it's probably, the Mag 7s and mega caps that are holding the indices up. We saw a little bit of an inflow early in the day in the NASDAQ and then a steady increasing outflow towards the end of Friday. But again, much more of a slight outflow in the NASDAQ than we sometimes see. Again, we see that big bump in inflow in the NYSE at the beginning of the day and then pretty flat the rest of the day. Again, just a reminder, you can see the near-term earnings calendar in the calendar section in Webull. So you can see earnings, who's reporting earnings in the very near term. See some biotechs, some techs. We look at the best performing industries for the week. So we see communications, top, some household goods, education, healthcare, utilities, construction, banking, consumer goods. So quite a mishmash. Distribution, more utilities. So again, some defensive bent, some technology bent, semiconductors, electronics, insurance, more utilities. So then oil, travel, probably the weakest. Again, we did get some signs from some of the travel companies, Airbnb, TripAdvisor. It sounds like potentially the consumer has spent their travel money, so we might see a slowdown in travel. Look at the best performing ETFs. So I think they're short on the Russell, short on small caps, up on the Dow, up on the S&P, up on the NASDAQ, down on the VIX. So we saw, quick pop on the VIX back when the Fed decision was coming out, and since then we've seen a pretty steep retracement. We'll see that in the futures. Down on Bitcoin, that's a short on Bitcoin, short small cap, short the Russell. Industries, so industrials, semiconductors, so the SMH getting some positivity, financials, utilities, so we might see a correction, retracement in utilities, energy down, real estate down, technology pretty mixed, SMH positive, basic materials pretty split, negative on consumer cyclical, so consumer cyclical, negative, defensive, positive, so again, more of a defensive bent. Commodities, where we'll see a big pop in wheat, corn, palladium. Again, wheat, corn, palladium. Must be that's probably China crane shares. So let's go look at the futures. So again, in all the indices, we see that, melt up, had a gap up, melt up. So again, I think this is all on low volume. We can see that drop off in volume. So again, my humble opinion, lack of sellers. The sell in May crowd may have gone away. So we're seeing that melt up. Dow's got some room to run up to that high. So we may continue to see that melt up in the Dow. Same with S&P. Got some room to melt up. Same way with the NASDAQ. Russell seems to be stalling a little more, getting more sensitive to interest rates. Looks like the Nikkei rolled over. This is interesting. Another trend I want to point out seems to be interesting. We seem to be a rotation into foreign markets. So Euro stocks looks like it's making a new all-time high. DAX making a new all-time high. Some of the emerging markets, foreign markets, ETFs were performing well on Friday. So again, we may be seeing a rotation into foreign markets. So in my humble opinion, I think that's a trend that might be worth watching. Also, when we get to ETFs, we can look at some of the long and shorts on the Euro. I don't have a short on the DAX. If I just zoom this out a little bit, and we can see the euro stocks making a new all-time high. So if you wanted to try to catch that rollover, um, we'll look at some ETFs that you can trade that short or long. Again, we'll see the risk reward isn't what I would like. I'm not looking to short the euro stocks, and I don't have one to short the DAX right now. But again, if you want to play that, we'll look at those ETFs. See again that steep drop off in the VIX. So people unwinding their hedges after the Fed interest rate decision. Again, I think with the light volume. Again, we saw oil test 80, got rejected, coming back down. So tested 75, I think, previously. So we'll see if we continue to get more downside in oil. Again, I think that's going to be dependent on the tensions in the Middle East. See this, trend up in natural gas, some volatility, but overall uptrending. Again, gold had that gap up. Looked like it was going to test the all-time high. Again, I think that's tension in the Middle East. And then it quickly retraced back down. We'll see if it heads back down or again if we're going to retest that all-time high. Same way with silver, made a run and then retraced back. So again, we'll see if it is going to go test its previous all-time high. And we'll talk probably more tomorrow about some ETFs that we can use to test that possible rejection that we previously saw from those all-time highs. Platinum running up, palladium lagging, copper running up. Again, we see the run up in grains, so oats, corn, run up in wheat. So again, congratulations to our BeachBum traders. If anyone's caught that uptrend in wheat, like with the WEAT ETF that we've traded, congratulations to you. Cocoa finally corrected. Lumber bounced up. Looks like it might be rolling over. And again, we've seen volatility in the bond yields and therefore the bond prices. It's kind of oscillating below 5. They haven't retested that 5 level again, but does look like they're rolling over. DXY had popped up over 106, corrected. Looks like it's settling in around 105, consolidating. Again, the Bank of Japan intervened on the yen, popped it back up. But once they relieve that intervention, it looks like it's retracing back down. We'll see if it tests the previous low, and if so, if they intervene again, or if it's going to stabilize here. Several of the other currencies did pretty well. The Aussie dollar, New Zealand dollar, Swiss franc looks like it bounced up and then leveled off. Euro bounced up and leveled off. Another thing I wanted to point out about that run in gold that's interesting is we got this, consolidation for some period of time around 2,300. Previously, we'd had a previous consolidation, looks like around 2,175 or so, and then we see these run up after that period of consolidation. So maybe we're going to see one of those run ups again, as we had, a good period of consolidation around 2,300. So seems to be, again, a trend in gold, run up, consolidate, slight retracement, and then on the next run up. So I hope that all helps. So next we'll look at some potential ETFs that we can use to trade these trade ideas that we've talked about. Again, that's how we use our ETF Google Sheet. Once we've identified a potential opportunity to long or short a various index, commodity, topic, etc., then we jump over to our ETFs Google Sheet, identify some ETFs we can use to trade that trade idea. And again, you can do the same and get 24/7 access to our ETFs Google Sheet, as well as our dividend payers, our options, puts, ROIC, etc. Google Sheets by joining our Patreon at the all access or VIP level. can find a link to our Patreon in the notes as well as in the description box below. So let me grab a quick drink and open up our ETF Google Sheet, and we'll go over some updates and additions to our ETFs Google Sheet. And if anyone in the chat has a particular commodity topic ETF that you want to look at, please throw that up in the chat and we'll take a look at those. Okay, firstly, I want to go over some updates and additions to our ETFs Google Sheet. We'll look at several of these, a number of them that have been mentioned or requested by our BeachBum traders. So firstly, just an update that I added the following to our sector sheet in both our ETFs Google Sheet and our Watchlist Google Sheet. So I added the sector spider on banks, which is KBE, and the sector spider on regional banks, KRE, to the sectors sheet. So another way you can watch sector rotation using either our ETFs or our Watchlist Google Sheet is each of them has a sector sheet, and you can see again the performance in real time or near real time. Again, these are the pricing has got a 20-minute delay based on the Google Finance functions, but again, great way to see sector rotation. And so I wanted to also be able to see the banking. We've seen some strength in the financials, XLF. So hopefully this will give us some way to distinguish where that strength is coming from. In addition to all the other sectors. So you can also see we've got the biotechs and then all of the main sector spider ETFs in the sector sheet. So again, great way to watch the sector rotation, see where money's flowing into and out of during the trading day. So again, I hope that all helps. The next one I want to look at is one that Wisdom had mentioned in the live chat last week. It's this BERZ, Microsector Selective Bang and Innovation, a minus 3x inverse leveraged ETN. So we put that in the research sheet in our ETFs Google Sheet. So you can always find a various ETF if you're looking for a specific one. You do a Control F find. So here's BERZ, again, minus 3x. So it's a FANG down. So again, another way you can trade or short the FANGs, even in a retirement account. So we see it's got a pretty decent risk reward profile. Again, it's relatively low as the FANGs are high. So the bottom on that's 24.50. So that would be a top in the FANG. So again, risk reward from support to resistance 3.4, 52 week 5.9. So again, pretty attractive. Let's compare that to FANG D, which we have in our main Google Sheet. So let's look at how that compares to FANG D. So when we used in the past, microsectors, FANG plus index minus 3x. So we see it's got a very high current because it's very close to support. Actually, I've got a very high resistance there. So for a 52 week, it's got a 5.11. Current risk reward 4.4 compared to BERZ of 18. So this BERZ looks pretty attractive. Looks like a good alternative to FANG D. So you can choose whichever of these you like better. We can look at the breakdown of this BERZ. That's not. Okay, so there's a Bank of Montreal ETN. That's interesting. So we see it recently did a reverse split, 1 to 10. So that might be skewing some of the overall results. It's not optionable. See the expense ratio, although the leveraged ETFs you don't generally want to hold for any period of time. Not a whole lot of data. Again, this is an ETN, so technically it's not an ETF. So there are some slight differences, and you can hear what the differences is. We have a video on short video on what an ETN is, and again, we can't really get much of a breakdown from there. Let's look at it in our ETF database, see if we can get any additional information. May not. So again, not a whole lot of data. Selective FANG index, equal weighted. See if we can get the holdings. Yeah, again, not a whole lot of data. So this one's a little more opaque. So again, you can see the risk reward profile. Compare it to FANG D. It's another option to use to short the FANG stocks if that is of interest to you. So I hope that helps. Thank you again to Wisdom for pointing that one out to us. And again, we'll be able to monitor that in our research sheet. And maybe we'll move it to our main sheet if it becomes as attractive or more attractive from FANG D. Also, Gerald Fitz mentioned another energy ETF, DIG, ProShares Ultra Energy. So we want to look at the risk reward profile of that and then compare it to our other energy longs, DBE, ERX. So here's DIG. See what the current price is. It's about 44. So right now, it's relatively high. Energy's been relatively high. So it's got about a 1.5, 1.62 risk reward for 52 weeks. We compare that to our other energy ETFs. So here's DBE and ERX, our other long. So 1.3 to 1.6. So, pretty comparable. 14 for bottom to top. This one's got a 29, so it's a little bit better bottom to top. So let's look at that in FinViz. So again, you can access the links to the FinViz profiles and the ETF database profiles in those columns in our sheet. Again, see it's relatively high. It's got a little bit of a room upwards. Looks like it does pay a small dividend, 24 cents, 1% dividend yield. It is optionable. Performance about 33%, so it's performed pretty well this year. We can see what the holdings are. So BNP swaps, Bank of America swaps, ExxonMobil, Chevron, ConocoPhillips. So some swaps and then some major oil producers. So again, looks like it's weighted pretty heavily to oil. Two times the daily performance of the energy sector. So that would be XLE. So 2x leverage on the XLE. So again, looks like another potential leveraged ETF that you can use to trade energy. Again, looks relatively comparable to the ones we have, which is DBE, particularly ERX. ERX is a bull 2x as well, so looks like DIG is most comparable to ERX. So you might want to compare the composition of those um, to see which one you prefer in terms of a leveraged ETF to trade energy long. So thank you again, Gerald Pitts, for pointing out DIG to us. I also added some single stock ETFs, leveraged ETFs on AMD. We talked about AMD. We'll be talking about AMD probably again tomorrow. And I wanted to see if there were some leveraged ETFs that we could long or short AMD. So we've got a 2x long ETF. AMDL, AMDS is the 1x short, both from Granite Shares. I looked for Direction and T-Rex single stock ETFs, and neither Direction or T-Rex had single stock ETFs on AMD. So we do have a couple options. So again, if you want a leverage long on AMD or a short ETF to short AMD, we've now got AMDL and AMDS in our research sheet. So again, you can do a find for those. Or right now they're at the bottom. You see the current risk reward profile. If you want to leverage long on AMD, see it's risk reward's not too bad. It's got a 52-week low of about 1292, so a little bit of a room to decline. If you want to short AMD, again, somewhat of a mixed risk reward, but both of them have a pretty good support or resistance, better than close to or better than 2. So again, a couple of ETFs you can use to long or short EMD, long with leverage, and again, be able to short if you want to be able to short like in a retirement account. So we hope that all helps. My last addition is SCHG. This is the Schwab US Large Growth ETF. This was pointed out by Bob Sharp in one of his videos, and this was pretty interesting. So another way to play large cap growth stocks. So I put that also in the research sheet, so we can see large cap growth. So see not a great risk reward right now as it's very high. So again, right now it's at 92. Up 52-week highs, only 93. Again, this is, as we'll see, this is mostly the Mag 7 stocks. They're all pretty high. We'll see it has had a pretty attractive performance. We'll look at it in FinViz. We can see the breakdown. So again, very high right now. I use this recent low as the support. So not a lot of risk on the downside to that support level. See, it's had a very good performance since the October low. It does pay a small dividend, but again, very, very low yield, 0.4% yield. So I didn't think it warranted putting this as a dividend payer. It's more of a growth. See, its performance for the year is 39%, so great performance. We'll compare that to the Qs in a second. I think it outperformed the Qs, even though it's not really leveraged. So we see the breakdowns pretty diversified in terms of breakdown. You see its major holdings, again, mostly Mag 7s, Microsoft, Apple, Nvidia, Amazon, Meta, Google. It's got Lilly, so you've got kind of another new entrant that some people are putting in the Mag 7, also Broadcom and Tesla. You see the percentages. It's an actively managed ETF. Major equity class sectors, underlying funds. So again, they're actively selecting these, and it looks like they're outperforming even the Qs. Let's look at the Qs. So if we look at the annual performance for the Qs, so 36%, so pretty comparable. But again, that SCHG has outperformed just QQQ slightly. And again, it does pay a small dividend. So Longer term, if we look at the monthly, we see it's had a steady increase, except for, in 22 when we had the Mag 7 decline, but it's bounced back nicely on a nice uptrend. So again, if you're looking for another way to play, the large caps, tech, including some healthcare like Lilly, etc., you might want to take a look at SCHG. We do have others on the mega cap techs and the Mag 7s. So you can compare that to MGK, which is mega caps. And then we also have the Mag 7s, MAGS, in the research sheet. So again, you can compare SCHG to those, both for the Mag 7 and also for mega cap techs. So let me know if any of you trade SCHG. What do you think of it? How does it compare to some of the other mega cap tech or Mag 7 ETFs? And what's your experience been? What do you think of that? I hope that all helps. So let me quickly check the chat and we'll see if there's any other ETFs to look at, and then we'll jump down to our theme and strategy for this week. Okay, a couple others we talked about, and I want to take a quick look at. So we talked about that run in the Euro stocks index, and we do have a couple ETFs in our Google Sheet to long or short the Europe FTSE index. So if you wanted to short the Euro, again, this is the Europe FTSE index. You see the risk reward profile is not, as attractive as I would like. It's not over 2. So I looked at this in detail. Again, not something I'm going to pursue right now. But if you wanted to short-term trade on a rollover in the Euro stocks, again, we have the EPV, which is the short on the Euro stocks, EURL on the long. So you can see when that tops out. That may be a good indicator for a bottom in EPV. So I hope that helps. Talked about gold. We'll talk about these tomorrow. So again, shorting gold, GDXD, DUS, DZZ. Natural gas. We talked about the run up in natural gas. The long on natural gas is boil. If you want to catch this short-term volatility retracements, short on gold, natural gas is cold, KOLD. We've got some single stock. Short on oil is DRIP or SCO. Long on oil is Gush or UCO. And we'll talk about silver. Short on silver, either CSL or SSG. If you want to short that spike when it occurs on silver, or again daily. Plenty of those significant volatility in gold and silver this week. So long with AGQ, short with CSL or SSG. And we've got all the pairs we've talked about numerous times on the technology sectors. Talked about the yen. So we're currently long the yen with a leveraged ETF YCL. If you want to short the yen, YCS. So again, you could find ETFs to longer. Here's the long on wheat. So again, it's had a nice run up. We don't have a short on wheat or corn either. Treasuries, if you want to play the volatility in treasuries, TMF long, TBT short. So again, if anyone in the chat, I'll leave the sheet up. And if you want to talk about or look at any other ETFs, please let me know. And again, you can get access to this Google Sheet 24/7 by joining our Patreon. So again, we've talked in quite a bit of detail about, has the sell and May crowd gone away? Again, we saw lighter volumes. We saw that decline in volume since the start of May. Again, in my humble opinion, I think this is such a well-known adage. I think a lot of people sold ahead of the sell in May crowd, sold at the end of April. We saw that when we looked at market performance for April and May. So I think right now, the sell in May crowd may have gone fishing. Question is, are they going to come back? In my humble opinion, again, not financial advice, but I think if we hit new all-time highs in the indices and the Mag 7s, we might see some selling, some profit taking before the end of May. Again, part of that adage, but also just some profit taking as the markets hit new all-time highs. So you can hear our previous discussions, again, the performance of May, how to make money trading in May 2024, in May in general, why, you can sell in May, but we don't think you should go away. As you can see, there's plenty of upside opportunity. As we saw this week, we're getting a melt up, again, on low volume, but again, possible opportunity. And if we do get that selling, that may be an opportunity to pick up some cheap stocks from your shopping list. Also, we're seeing pretty dramatic reactions and typically negative to earnings. So they miss on guidance, don't meet expectations. Those might be buying opportunities on a miss in earnings. Talked about how to make money in the spring, and you can access all of these videos via the links in our notes document. Tomorrow we'll also talk about how all of this feeds into selecting our top swing trading stocks to watch, stocks in our bullpen and our shopping list. Also talk about using dividend payers to generate income and also option strategies to generate income while we wait for our swing trading setups to manifest. So if anyone in the chat still has any questions that you want to talk about, any topics you want to talk about, please throw those up in the chat. Otherwise, thank you all for joining. Thank you for participating in the chat. Thank you for watching our video. We'd love your feedback. We hope that you'll like this content. Please smash the like button. Help us try to get the YouTube algorithm to show us some love someday and share our content with more traders around the world. We'd greatly appreciate it if you would directly share our content, repost our social media postings, etc., to try to reach more traders around the world, keep building our community. Again, we'd love your feedback as to what we can do to improve our weekly trading game plans, any of our videos, our tools, our ETFs, and other Google Sheets, etc., to help you succeed in your trading career, help you make money trading. Our Discord, again, please put them in the comments here. Join our Discord, comment in our Discord. You can tag us. We're BeachBum Trading, all lowercase, no other characters, numbers, etc. So again, we'd encourage you to also join our Discord, and we can continue these discussions 24/7 in our Discord. So again, if you have any questions, comments, suggestions for improvement, we'd love to hear it. We hope you all come back again tomorrow for part 2 of our weekly trading game plan for the trading week of May 13th through May 17th, where again, we'll be taking all this market analysis, these trading strategies, trade ideas, select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. And again, we'll look at dividend payers and option strategies to also generate income while we see if the sell in May crowd has really gone away, if they've just gone fishing, and if we're going to see more selling towards the end of the month. So ways that we can make money trading in either case and in any market environment. So thank you again all for watching, and we hope to see you again tomorrow. 10 a.m. Eastern on Sundays for part 2 of our weekly trading game plan. Thank you again and have a great day.